Well, hello and welcome everyone to your midweek live. This is Ankit here, and as always, we'll be talking about markets. Take a look at where things are, especially as we are coming back from this holiday, this Labor Day. It's already a holiday shortened week, so there's not a whole lot to happen. But this is again the time where you need to prepare, especially as we go into this fall trading. This is where liquidity come back in the markets, things start to move a lot better, and I think that's what we need to be prepared. So let's get into it. As always, we'll be taking a look at markets, taking a look at everything. So we'll be kind of following a process, and that's what I always recommend for all traders to do. At least twice a day, where you do it towards the end of the day, towards to do the beginning of the day, but you kind of take a look at a broader market analysis, then go down into currency baskets, take a look at news reports, see how things moved, and then we'll start to take a look at some possible opportunities. And again, if you have any questions, go ahead and type the chat box, and we'll take those questions as we go.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
All right, so let's just jump into the market analysis and take a look at how things have been moving so far this week. Again, we just have yesterday and today's market price action, but overall volatility seems to be coming back in the markets. So if you really take a look at volatility in the currency markets, or take a look at volatility in the broader markets, we definitely had a very quiet summer, I would say. If you just take a look at where we are, look at the charts over here. This is the VIX. You can use the VIX to take a look at where the broader markets are. As you can see that we're kind of sitting in the lows, and then we just see a bit of a jump here. So we're starting off with some movements, but we still have quite a bit to go through. Historically speaking, September to October is usually the most volatile sort of time. Now, you look back last year was a bit of an anomaly. I mean, we had a very busy August last year. I mean, look at this big spike in the volatility that we had, and pretty much September, we just saw a bit of a dropping down of the volatility. We, on the other hand, this year are starting off in the lowest level in volatility that we have seen for the year. So as you can see, where we are, we're seeing a bit of a pickup in volatility. So hope that we see more of that, because that's really where things get a little bit more exciting. All right. Now, looking at the rest of the news, market data is likely to drive the markets here. We are already seeing movements, especially out of the U.S. U.S. dollar is getting moved by this economic data. If we take a look at the expectations for rate cuts, that's a big topic here, especially for the U.S. So now, if you take a look at the numbers here, let me bring down this expectation here. So one of the things that you'll notice, let me get back into here. One of the things you notice is that we are looking at a 95% chance for a rate cut. So again, September rate cut seems to be in the books. Now, when we take a look at expectation for October and December, this is where you need to pay more attention, because you can see that we are kind of pretty close here. For October, just yesterday, we were sitting at about 48.9, so pretty much halfway. And then today, that expectation kind of picked up to about 52.1%. So what the data does is that it drives the expectation. If the expectation goes up, that's going to put some pressure on the dollar. If the expectation sort of goes down, that helps the dollar. So that's really where we are seeing that, the pull and the tug that's happening in the USD. So that's really what's going on here in the markets. Outside of that, we're just watching for these key levels, especially when it comes to these currency baskets. We spend the entire summer, for the most part, in these sideways ranges. So whenever you have that, this energy's been building up, things are moving back and forth. And then when we get the expansion of that energy, we start to see things break out and move in a certain way. So that's something we'll be paying close attention to, is where is this next big move is going to come? Or if there's a big level that breaks, then probably that would be a key break that we need to pursue. So again, that's the big focus here as we go into the September trading. Now, let's just take a look at the numbers so far. As you can see, the numbers, not so great. I mean, things are kind of more in the middle. Usually 0.5% or lower is just not the greatest move, but then anything above the 0.5% is where, the moves start to look interesting. You can see the Aussie is slightly above 0.5%, and then yen is slightly, down more than 0.5%. So here we are. The best moving currency pair so far is the Aussie yen. And then if you take a look at Aussie, maybe Aussie Kiwi, definitely Aussie is the one that's leading the charts. I'll be talking more about Aussie as we look at the chart, because when I look at the chart, I was kind of surprised. I've kind of taken it easy in the markets for the last 2 weeks, but then, Aussie is definitely coming out of the woodworks here. Outside of that, European currencies, you can see mostly flat, and there's a back and forth happening in the dollar. But again, nothing on the trend side. We're just getting a lot of back and forth. Now, we're going to move our focus into broader markets. And you can see the broader markets, S&P is slightly negative for the week. World Stock Index is slightly negative for the week. So as we take a look at the market outlook, I think we are probably just at the crosshair trying to figure out which way we're going to break, especially after a very good summer in the broader markets. Now, crypto market is up, but again, most of those gains are coming from Bitcoin Cash. But when you take a look at Ethereum, which was the biggest runner this summer, has kind of calmed down a little bit here. Bitcoin has a little bit moved, but overall, I think the numbers are getting skewed by that outsized move in Bitcoin Cash. Gold, I must say, it just started off on a very strong note, now breaking out to new all-time highs. So the metals are certainly looking interesting here, breaking some key levels. But outside of that, you can see there's not a whole lot that's sort of taking place over here. Looking at oil markets, slightly flat, down 0.01%, so not a whole lot. So let's move our focus into crypto markets. Like I said, Bitcoin Cash is really where the biggest move's coming from. But outside of that, things are more on the lower front. So nothing too major when you take a look at the movement so far. Nothing too major. So I think it's still really early to make a call and say, well, this is going to be the next big mover. I think we still need to see a little bit more to make that conclusion. So when we take a look at market outlook, the biggest question is that where are we and where do we go from here? Has anything changed? So this is the broader markets, and you can see that we are above the 20 to 50. But you see, in the grand scheme of things, we are consolidating. We're going sideways. But we had an impressive summer, and markets had a pretty big gains. But we are definitely in this consolidation phase here. So what's going to drive the markets up or higher or lower? I think maybe that's going to be more data dependent. But where we are right now, I think it's just rolling the dice here. So we just need to wait to get the confirmation. All right, so that's really where we are in the markets. Now let's take a look at the calendar, because this is where, if the movements are going to come from these news events, and now those are the news events we need to focus on. You can see that so far we had the U.S. Manufacturing PMI yesterday, and it wasn't really a big mover. It was slightly over the expectation. Didn't really see a big move off of that. Aussie GDP came out a little better than expected, so we're definitely noticing that helping the Aussie. And then this morning, we had the Joel's job opening, and you can see that there was a drop in that number. Remember, right now, the focus is really on the employment. So you really need to watch out these employment numbers as they're going to drive the moves higher or lower. So just after that jobs numbers, we had the yields drop, the dollars drop. So we're getting a bit of a move out over there. But I think the biggest fireworks are still to come. And that's just going to be on Friday. Friday, you can see we have both the US and Canadian employment report. But the big focus is going to be on the US report. Look at that. They're expecting an unemployment rate to go up by 0.1%. And then the change is about 75K. Remember the last time we had that jobs report, and we actually saw a pretty nice move in dollar and yields off of that. So I think right now a lot of focus is going on this. I personally think that a lot of the worst is kind of priced into the markets. We already have markets sitting at 96% chance for a rate cut in September. If that report comes out a little bit worse, we'll probably see more expectation for October rate cut. That's where I think that the dollar and then the yields will move. But if that comes out like in line with expectation or where it is at right now, I don't expect a whole lot to happen there. So we'll see what happens. These news events a lot of times are kind of rolling the dice. Sometimes you have a better idea, and sometimes you just have to kind of see whichever way it goes, and you have to react to it. Tomorrow we also get the ADP numbers. These are the private figures. So they're expecting a 73,000. So that's the first thing we'll focus on tomorrow. And then that will lead us up into Friday for that jobs report. Services PMI, I won't be surprised. I think services definitely is looking a little better than the manufacturing numbers. But I think employment numbers is really where you need to focus on. So first thing first will be the ADP numbers tomorrow. But the main focus is going to be on Friday. And I think after that Friday's jobs number, we'll probably be able to establish a bit of a follow through whichever way it goes. So that's really the big focus here for me this week. Now let's take a look at where the velocity is. As you can see, velocity not so strong because so far we had movements yesterday and today. Yesterday was more on a stronger dollar. Today's more on the weaker dollar. So you can see we just went back and forth. So we didn't really go anywhere so far. We had volatility. We moved back and forth, but not a whole lot. But like I said, out of everything, the one thing I really like here, or the way things are moving, is the Australian dollar. Everything else, sort of, you can see, is a -1. CAD is a -2. But yeah, not a whole lot on the velocity front. But this is where we're going to go into our possible trades and then take a look at the currency baskets and see if we can find something better over there. So let's just move in and take a look at our...
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Our currency baskets. Now, I'm going to start, as always, with the broader markets just to see where we are. I mean, here's the hourly chart. And this is what I was referring to earlier. This is where we started off. We have volatility. We went back and forth, but we haven't really gone anywhere. We haven't really broken out significant highs or lows. So I think for that, we probably have to wait till Friday. But overall, you can see the market's in a bullish consolidation phase. Now, when you bring it down into other markets, let's take a look at the bond markets today. As you can see that the number today came out, and that really moved the bond market. So here the 10-year bond yields, and looks like it wants to break lower. That's really where we are at with these bond yields. And again, expectation for a rate cut is still sitting at about 1 now, going to 2 rate cuts for October. So data dependent, this thing is going to move back and forth. Now let's take a look at where things are in the currency front. So we're definitely getting a bit of a leading move from the yields, but is the dollar following that? And I think this is where, when you look at the chart, you realize that, take a look at dollar. most of the things looks very identical. Like as the dollar is stuck in this range, you can see this range goes back to the lows that we saw back in July to the highs that we saw in early August. We're kind of in the middle over there. So this is where if you have to rank the currency, and this is where we do our trend analysis and we rank the currency, and we get a score. This is a 0, where above the 50, below the 20, just not going anywhere. And that's really where we are in the dollar. Now, can we say that for other currencies? Well, there is consolidations happening. Here's the Swiss franc. You can see we got a resistance in place. We are above the 20 to 50, but we definitely in this little flagging pattern here. So not so much over there. Here we are with the Japanese yen. You can see this thing did move lower, but found some support right over there. So you can't really say this is trending. I mean, getting a little bit pressure here from the moving averages, but when you start to zoom out a little bit here, you realize that we're just getting in the lower band of things. So this is kind of sitting right in the middle. So not so much over there. Now let's go into the euro. Euro has been one of the good currencies so far, in this past summer, and this you can see that this thing is kind of going sideways. So I can't really put a lot of emphasis on it. This is probably a +1. We got the highs over here. We got the lows over here. Now, when we go to the British pound, what do you see? British pound, you got 1, 2, 3, and 4 tops. And then on the bottom end, that's where you are. So you don't have a trend in place. You have that range in place. Now, let's go into the CAD. What do you see in CAD? Same thing. You see CAD not really going anywhere. It's having one up day, one down day. Yesterday was a pretty strong day. Today's it's a down day. And that's really what you expect. When you start to get daily trends as 0 or 1 or +1 or -1, that's what you expect. You don't expect a whole lot of continuity. For continuity, you need that nice +2 to +3 where moves are more robust. So CAD's not really going anywhere. Let's take a look at the Kiwi. As you can see, that Kiwi really hasn't gone anywhere. It did break a key support, but so far, this is a bear rally pattern. It doesn't mean it's ready to be shorted, but it doesn't mean that we want to buy it because we have the 20-50 moving average sliding lower. So let me leave the best currency for the last, because when I look at everything, I'm like, this is sideways movement across the board. Aussie really surprised me because here we are. Aussie is in this sideways channel for the most part for the entire summer as well. And look what happened here. For the last few days, I mean, this is a pretty good consecutive run up. And we actually broken above that resistance here. So really, if you pay attention to all that, this is the only thing that has moved in the past few weeks. I mean, this movement in this Aussie actually looks the best here. So now, is this a true breakout? Well, so far, it looks convincing to me because we got to that resistance point here. We had a bit of a shadow, but then here we are with the full body candle. So I think, it doesn't matter what I think it should happen. I think based on the price action, do I want to buy here? No, because, look at the green candle, look at the run that we had. I would love to see this prior resistance act as a support and for that to kind of move higher from there. So this is, again, something that looks the best to me. But outside of that, as we looked at everything is sideways. So that's really where we are. So we don't make the markets. We react and position ourselves based on what the market is telling us. So based on this, Aussie's the only one that looks the best. So let's just start taking a look at some of the Aussie pairs. Here's the first one. I always talk about correlation. And this one looks very interesting to me. Aussie Kiwi. These are two positively correlated currencies, but then when they deviate from each other, there's a decent move. As you can see that this is a very nice move here in this Aussie Kiwi. But we are right up against that resistance. And last 2 times, it did stall over there. So that's why I think I want to see Aussie sort of stabilize a little bit here, maybe have a shallow pullback to buy into. I think that will be an interesting, pattern to see and develop. But here we are. I think it looks pretty interesting as we get towards that key level. So When we look at everything else, what do you see? You see things are moving back and forth. Maybe dollar is one day strong, there's a 1 day weak. Here we are. Yesterday had a pretty solid day. Today having a bit of a inside day. So whenever you're dealing with currencies like that, continuity becomes an issue because things moved yesterday. Everything looked good. Let me just take a look at the chart here to kind of give you an example. Here's the Aussie USD example here, and I was watching this chart, and then you have a nice little pullback here. Looks like a little bear rally, and then boom, look at that big run over here. So right over there, we are up against that resistance, but it's not a clear sort of a range to break out of. There's definitely a lot of overhead resistance because again, we just don't have a currency that looks the weakest. So I think this is where I said earlier, I'm looking for levels to break out to give me an indication, well, something is really up on the horizon that's breaking and something that we need to pay attention to. And this is where you can do some legwork, throw out some alerts into place and say, okay, if it breaks this level, notify me. I want to be interested if it does, if that happens. So that's really where we need to kind of do all our homework and say, okay, well, if Aussie looks the best, what can I pair it with? Is the yen just going to break lower? I mean, here we are, Aussie yen, right up against that resistance. Do I want to buy here? No. But would I buy if it started to give us a confirmation? Absolutely. So the fact that the only thing's moving is the Aussie, kind of makes it a crowded trade. And this is where, it makes a big difference on where you enter because, here we can do everything by the book perfectly. But, these support and resistance levels are key sometimes. They do stall. They do kind of hold those levels and they become more predictable. And you can see where double tops have happened, triple tops have happened. Those things just, kind of happen more often than not. So those are the things that, you want to pay close attention to, especially when you're dealing with ranges. I'm very skeptical when it comes to levels, the support and resistance level in the range bound markets. When I get a bit more direction, that's where I want to start betting more on these continuation patterns. Look for the resistance to break. Leg in. This is where those strategy works the best. But when you have a range in place, now this is where your trades are not lasting that long. Here's a good example. I was watching pound dollar. I mean, you can see that beautiful move down here. We had a little bear rally and then move down, and then here we are, move back up. So a lot of time these movements are taking place, but it just doesn't have a bit of a rhyme or reason to it. So these are the ones where you have to kind of, trade, for a day or two and just get out because that's how these trades are lasting that long. So as we go into other pairs, I'm in the same boat. I mean, here's a dollar yen. I was watching yesterday. I'm like, oh, this looks interesting. But here we are falling back in the range. So do your homework, draw some support resistance level, do that on the currency baskets because I think it really makes your life easier when you do it in a currency baskets because you want to know when something is moving. And then you can start to do the legwork and start to go into those individual currencies. So Aussie again, like I said, it did move. I'm waiting to see if this holds. Don't really want to buy it here. I think if I really have to wait, I'll wait around US data to see how things are going to move. But outside of that, even the European currencies are kind of holding, but they don't seem like that's where the money is flowing. To see where the money is flowing, this is the kind of price action you want to see. But the only downside is that it's a very concentrated one currency that's moving, but nothing else. So it's really skewing some of the movement here. So as I really flick to the charts, I think we're just back in the range. So what do I need to see a break? I mean, here's a good example. Swiss franc. Do I want to buy here or sell it here? No. If it does break above this level, let's add an alert here. Notify me when it's going to break this level. Oh, is this going to break this moving averages? This is where you can set up another alert and say, hey, if this breaks this range and falls below these, notify me. Okay, right here. I can see the break's going to happen here. And once you'd identify those, then pairing becomes easier. For example, we identified that Aussie looks the best. Now, Swiss franc, can we pair it against Aussie Swiss franc? Don't look the best when it comes to this chart. But if the currency baskets start to move, if the Swiss francs start to move, then we know there's a movement coming in there. But at this point, it's anybody's guess to figure out where things are going to go. And I think this is where, as you start off this, fall trading, you have to be more on the guard and kind of keep the powder dry and see which way it's going to move. Like, who knows? Like, maybe the dollar, the data is going to come out. Maybe jobs report is not that bad. And next thing you know, dollars start to take off. And that becomes the next big mover. That's what you have to kind of focus on. Let me give you an example of last year, because last year was interesting. I mean, last year was a better year, I would say, because you got the movements here. You got big move up, big move down. But let me give you an example here. We started off September. We kind of went sideways. But look at the big move that came. This came off the, all the expectation was pretty weak for the economy here. And we had this jobs report here in October. And that was just better than expected. And all the expectations started to reverse about a rate cut, and market had to reprice. As you can see, some big movements happen. So this is why, it's important to keep the powder dry, but then wait for, a signal to say, okay, well, something is moving. Maybe a trend is moving. Now you can see that over here, we went from a downtrend to an uptrend. Things can change, right? We don't see these trends always last that long. These trends will have a lifetime, and then they will turn one way or the other, especially in currencies. So that's what we're going to focus on. But when things are sideways, try to keep the powder dry and wait for the next big move to happen. And again, if you do take advantage of that shorter term movement, just don't get married to your long term outlook. That's one of the biggest mistake I see. I want to trade velocity. Velocity might be good for a day, but if I start to tie that trade into holding it for 4 days, now, maybe that's just not the right strategy for that. So always make sure you have the right expectation and right strategy to capture that movement in the markets. Okay, I have a question from Rudy. Says, what do you think about Aussie CAD? And when there's a confirmed break, of course. Well, let's take a look at Aussie CAD. Well, Aussie CAD looks interesting to me. Yeah, it does. It is breaking out. Now, the question is this the best currency to be, focused on? Let me go into the CAD basket here. I mean, we have the jobs report coming out of Canada as well on Friday. But, one of the things I don't love about that is just Aussie CAD. CAD is just sideways, right? So this is where things are likely to fail. I rather want to see the CAD start to move with certain key levels. I think that's where it will be interesting. Because right now, Aussie CAD looks good because CAD is sideways and the Aussie is breaking out. I mean, any currency pair you take a look at, now we're looking at Aussie CAD, but now when you look at Aussie CAD against the Aussie Kiwi, you realize, okay, well, I did miss out a move. Or, that Aussie CAD has been underperforming while Aussie has been outperforming. So don't love that. I like it from from that, but always start the decision making from a currency basket and then move on to the currency pair. I do like the Aussie, but I think it might, catch a bit of a stall here. But at the same time, I don't love the CAD here, and I have to wait till Friday to whatever happens with it. And you never know. On Friday, either dollar and CAD is the best currency or dollar and CAD is the worst currency. Now, that's where Aussie CAD could, it's more potentially be a news trade for me, because if it does break out, if it does stay here, maybe it has a potential, combining with the news event to kind of break out. But again, you're trading the news. In that case, you pretty much can be looking at any pair and they will look very similar. All right, so let's just wrap things up here. Like I said, market expecting market volatility to pick up and the economic data in focus. I want everyone to get excited, but not to get overexcited, because markets still have to show us which way it's moving. But till then, be watching these numbers and then take advantage of those opportunities when they come. It's still early, it's still 2 days into September. September is usually a big volatile month, and your job is to capture whatever next big move is going to happen. That's really where the big focus is. Risk to reward ratio, that's what we're going to focus on. Sideways movements, eventually they will break out. But then our focus is to make sure when they do break out, then we do make a change and try to capture that move. But meanwhile, just stay disciplined. I'll keep everyone posted in Discord as well if I see something. But for now, the game plan is take a look at the news tomorrow, then take a look at, most importantly, take a look at news on Friday. And then on Friday, once we get the numbers and we get the price action, we'll be able to forecast our following week much easier because that will guide the movements higher or lower. So that's what we're going to be focusing on here. Well, thanks for joining here. Enjoy your rest of the day. Again, looking forward to being more active as the market gets more active. Thanks, everyone. Bye-bye.